comes to probabilities, there are two sides to the probability equation that you really want to take into consideration when you're putting on a trade. If you've read the blog above, you'll note that a lot of probabilities are based on what happens historically and then assuming that those historicals will work their way through the process moving forward. It's extremely important to do a lot of historical research to confirm that over a sample set of trades, the thing that you're looking for works and it makes sense historically, because again, that historical data theoretically should play itself out in the future to a positive level more often than not. So in this particular example of probabilities on PHIO, there were a number of things here that we were looking at that falls under the category of probabilities. Now, as a trader, the thing that we're looking for is we're looking for how many things can we stack in our favor that increases the probability of a trade. As you know, trading only works three ways: up, down, sideways. Two of those markets we can make money in, one is irrelevant and we shouldn't bother be looking at it. Now, if we're focused on the long side specifically, we want to increase the probabilities of something working in our favor. How do we do that? The first thing and part of my process is there a catalyst? A catalyst will always immediately increase the probabilities of a trade working out. On the back end of that, after I've understood the fact that there's a catalyst, the second thing I'm looking for is a high probability pattern. Now, a high probability pattern will be something that works out more often than not based on historical data, and moving forward, it's something that I've seen work out more often than not on a forward testing sample set. Okay, so for me, I always go through what's called a 20 block. As I mentioned in the blog, I'm looking at every 20 trades I put on, and I'm looking at the exact pattern that I traded, and the question is, how often did that pattern work out, and how often did that pattern fail? If I'm at least working at a 50 to 60% success ratio of the pattern working out, and the upside is always greater than the downside, I'm in a nice spot, and I don't argue those probabilities. So in this example with PHIO, there are a couple things that I'm looking for. First of all, there's a catalyst, right? So there is news here that increases the probabilities. The second thing I'm looking for is a pattern, a high probability pattern that works out more often than not. In the case of PHIO, there is a huge ascending triangle that explodes around 2 p.m. and then rallies into the close. And then the third portion of this is that what are the probabilities of A, the pattern breaking out, but B, moving its way into a profit level that outstrips the potential risk. So we're going to look at PHIO again, and what you're going to see is what's called a flat top breakout. There's a level of resistance right through here, and lows are starting to get higher and higher and higher and higher. So this pattern is what's called an ascending triangle. It's a high probability pattern that will break out more often than not. Okay, so this is one of the patterns that I trade most often. There's a couple things that you can layer on top of this high probability pattern, like a shift in momentum and a shift in trend based on the MACD. So you can see right through here, this teal line is crossing the red line. The teal line is what's called the MACD line. This red line, or the 9-day exponential moving average, is what's commonly referred to as a signal line. When it's crossed bottoms up like this, it's a signal that there's going to be, in this case, a bottoms up bullish trend change, and in that, layered with a flat top breakout getting long, you've increased the probabilities that this pattern is going to work out. So in this particular situation with PHIO, a breakout trade would occur right through here on this particular bar. So when you get long this particular bar, you then want to work your way back, and you want to ask yourself, well, where am I willing to put on risk? In this case, you would see that there's a bit of a floor right through here where there is some price action consolidation. So you can see that price action gets into this range and consolidates, and it's building potential energy. And in this particular situation, that potential energy turns into kinetic energy and it explodes to the upside. So right in this particular situation, we're looking at this much risk. What I'm going to do now is I'm actually going to go to the bottom of the day and I'm going to measure using the Fibonacci projection tool to see where price action could potentially run to. And I also know that on my personal data, the 618 target and the 100 target are high probability profit levels where price action could potentially run to. And you can see that when this bar breaks out on the back of that high probability pattern, which has that catalyst, which increases the probabilities with that buy signal right through here, again, further increasing the probabilities, price action breaks long and it moves straight into the 618 before it consolidates and then transitions into the 100 level. So the things that we're looking at here in terms of probabilities are, is there a high probability pattern that is going to break out? In this case, absolutely. Second is, what's the probability of it breaking out and then carrying into a profit target taking level? In this case, again, very, very high. It hit 2 targets. These are the same 2 targets that me and the team are hunting for every single day in the market. So again, just to summarize probabilities, this is all stuff that I've been trading for years and years and years based on a ton of historical data suggesting that this will carry long over a long period of time. Do I go through losing streaks? Absolutely. Do I go through winning streaks? Absolutely. Do I care about either of them? No. What I care about is, are these high probability patterns going to keep presenting themselves on the back of catalysts? And are these high probability patterns going to keep breaking out long into these high probability reward to risk situations? And as long as this continues, I will keep trading this strategy. Now, this is a strategy that I've personally been trading for about 9 years, and it's a strategy that's been traded for eons before I even got into trading. So the historical data suggests that this is a high probability situation that will continue to work out moving forward. So when it comes to probabilities, you want to ask yourself, is there a high probability pattern? And if so, and I'm willing to take the trade, is there a high probability scenario where the reward is greater than the risk? And if you can answer yes to that, and you can do your own data and research, and this carries out more often than not, at least 51 to 60% of the time, where that upside is greater than the downside, you will achieve consistency. The big question is, do you know where to find these stocks? And do you know how to apply risk when time permits? Those are the big questions. And can you handle your mental state when trading? If not, you should probably reach out to the team, because this is exactly what we specialize in. It's about how to find these stocks, how to trade these stocks, and how to manage the risk mentally and on the capital side. Hope some of that helps. If you have any questions, please feel free to reach out.